Very good evening, friends. I'm Nalnakshi Swami. Welcoming back to my channel. I'm explaining you people how you could have taken the trade in the Nifty call option 26,100, or you could have, held this call option from the previous day itself. From 19th itself, you could have taken the trade. Here, I'll go back to the 7th. This call option had come around 46 rupees on 7th of this month, 26,000. It was very cheap. And then it gained, see, just follow the colors. This is the bear color. That means it is selling off. And then it retested these levels. It has broken below this. Let us put a line over here. It has broken below this level, and let me extend it. Extend to the right side. Okay. You can see in this game from 7th and on 11th, it has come down. It has come down below this level, 89.7, and it came down to 60 rupees, and then it rallied from the bear to bull conversion. You can see bull EP over here. Once it is come, you are holding the position. It went up to this level, that is 198 on 14th. And then it came down and retested. While going back, it was a sell on rise. This call option faced resistance and it was a sell on rise. Let me take this one. This was sell on rise level. Same put writer became the resistance and market came down. Again to the bearish area. This time did not make this low. It stopped over here. Already strong level of supports have been PE and CE levels were created over here around this area. So it came down and made a low of, you can see 66.1 and the low was 55.85. That is the beauty. This level, after many days, nobody can remember all these things. With this indicator, you can take the trade. For example, yesterday, market rallied from, this was the low was 66 rupees and then finally closed around 131 rupees. Okay, 131 rupees, this was the resistance level. Market came down and it did not claim this resistance. Okay. And it had come to the support. Morning opening bell, it came to this flip zone from lot of buying has taken place. Without any indicator, you can trade this with this EP lines also. But you need rolling pivot with this. For sometimes it will, since I am on the hourly, you see, if you are on an hourly chart, if you enter, keeping the second hour, if you would have kept as the stop loss here, if you would have entered around 140 or 137, it had given you lot of money. Here you can see it went past 232. 232, once it started crossing this is bull to bear, and here the retest of this level failure and it became a bear. and it was in this area only, bare area only. It opened in the bare area, this first candle, and crossed this level. Even otherwise, you could have taken, considering 160 is the barrier level, even if you would have taken up from the 160 level, it crossed this bull, bull to bear, bear to bull. You can see so nicely the market rallied. So if I change the time frame to 5 minutes, then you will see lot of intraday price reaction will be there. Once you enter, you have entered around, it came down to, you see, the first this candle came down to this level. Exactly. This is the put level. It came down to put level, and there comes, we will enable our rolling pivot. Okay. See, there was no change in the trend. Even though market came down, you can see over here, there was no change in the trend. Gan Hilo running positive, and only the price dipped below the pivots, supports. And to reclaim back, you could have taken, this was the zone, once it started moving above 137, you could have held the position. See the line. This is the line, Gan Hilo line. Let me, where is that? Any highlighter? I think we get a pen over here. Here, this is the highlighter. This is acting as a support over here, and you are not bothered. That is the beauty, you are entering into it. So don't try to enter in between. And if you enter in between, you see these EP lines, support lines, and understand these lines, you can take the trade. This is the beauty of the trade. That's how I told you. Without any EP markers, rolling pivot, you can make out the trade. But you need, once it dips below, sometimes some confusion will come. See, these are the base level, market came down and it is moving. It has moved higher. So this is the way one could have taken with the help of rolling pivot as well as my EP lines. So start understanding the EP lines. Let me remove the drawings. Even if you are on the lower time frame, you're just observing where this is, bulls have flipped to bears and it regained the bull position. So this is the flip zone, flip level. 130.65 is the flip level. Once the price started moving above that, this is the flip level. Already these are all bull zones. Bull zones from here. So market will not come down deep down here, and bulls have taken control from this area from 100 rupees. From 100 rupees, the dip is very good. 119, or the low was 119.10 is the dip. If you see that, suppose, don't do the mistake. If you go for the put option, clearly you can make out 26,100 put option. It is traveling. This is the boundary. Bear to bull. From there, bulls have dominated. So you could have taken your short trade. Suppose if you are a put trader, you could have returned the put without any this thing. You could have returned. This is on the last yesterday itself, around 190 if you would have returned. Today, you could have considered this level. This is the level. if you would have considered this level and marked this level, and let me enable the rolling pivot. Rolling pivot. See, the trend is down. Why do you want to take the trade? So you could have easily written the put option. There is one person writing the put option or writing, yeah, they could have made very clearly. See, if they would have written from 190 or 160 today, suppose if they would have written around 160 on 20th, they would have clearly made this money. From 160 to 60, it is 100 points they could have captured. 100 into 75, 7,500 they could have captured, but the writer has to pay lot of money, around 75 to 80,000. By hedging the position, buying the out of the money put option, you can make money. That's how it is. You can make money like this with my indicator, with my EP lines. A call writer can do this, a put writer can do this. Make money very easily, friends. Thank you very much. Understand this. This is the simple game of color. If you start observing the color, flip zones, then you will be profitable. Don't get confused. Whoever bought my indicator, EP indicator, they try to understand this basic thing and start trading. Many people have already understood and they are making money. And few people still they have to catch up. For them, I made this video. Thank you very much. Nalinakshi Swami signing off.